Good morning, everybody. Welcome to the London session on TopstepTV. My name is Deeyana Angelo, aka Market Stalker D. Stalking this platinum trade based on the takeout of the Asia low, so we'll see how that works. It's only meant to be a little scalp up to the level that was pretty reactive yesterday, which was 975. But there is a danger that we go into a gap fill down to the London value. However, typically those moves happen a bit later in the day, so that's the idea here. But anyways, while I'm stalking that and waiting for some signs of life and buyers in here, let's just go over what we have as levels of interest. There is a level of 2620 in gold that I might want to use at some point today. And for the rest of it, I think we're a little far away from my levels of interest. Like on crude oil, I want to see what happens around the 70s. And I don't really want to trade in between those levels. But let's see who's around and say hello to a few regulars here. Bruno has already posted a disclaimer. So even though I am now Series 3 licensed, I'm still not a CTA. So we still need to make sure that everybody understands that this is for educational purposes only. So unless your plan says, you know, trade a long of platinum this early, just don't follow, right? Don't follow anything that you see blindly. Do your own research and follow your own style of trading. However, many of us have different styles of trading that you might connect with, and therefore you might find that you can add and tweak your own ways of trading. All right, so there was a block of orders around 67.5. They seem to have disappeared. So this is now looking more like a mean reversion potential. I'm just not that happy doing these sort of breakout trades this early, because typically for some of these products, they don't usually just go into a simple trending move. There's usually a fake out. Then they sort of mess around a little bit and go into typically a neutral day type of some sort. And I'm going to stick with that for now. So I will try and add into this if I see any sort of evidence of buyers stepping in. Now, I'm kind of flipping between a 100-tick chart and 2-minute chart because if you look at how the 100-tick chart looks, it's like it's fine, but somehow today I think platinum is not super fast, and somehow the 2-minute seems to be, how can I explain this? This is more like a discretionary thing on my part, that sometimes 2 minutes for these ribbons are a little bit more accurate, if you will. All right, so we have a jump here. So yeah, let's try scale in, because we've now gone back into the initial balance, and I will show you where the initial balance is. So the initial balance is here. So as you can see, we tried to get out of it, promptly came back inside it. And this is me front running the idea that we will test 975. So that is a part of my plan today, shorts from 975. Now, even though we have this level where the gamma exposure might flip, like I said, it might be a little bit too early for that. So I'm taking the time of day to run a hypothesis that I have in mind. I may have picked up some sort of a cold from like a test center or something, and I've just had one, so I don't know what that's all about. So I don't feel the best today. Yesterday I spent most of the day just sneezing my head off. So we'll see. Maybe I'll manage to get out of it without actually getting sick. But I feel a little bit not great. So we'll see. And I scaled into this around my MAE for platinum. MAE stands for maximum adverse excursion, which I like to modify as a metric, so not to use it as it comes with most platforms, but actually to determine whether my drawdown from entry is a certain amount of ticks, and I use a few ticks out of that number to what they call DCA, but it's basically just an average in. And on this account, right now I am deeming 2 lots on platinum, which is pretty cheap. It's $5 per trade, per tick. I am using that as my default size. So I start with 1, and then I scale into the full position. So I don't start with my full position and then go up to 4. I start with half position to see whether the trade idea actually has merit, thereby controlling some of that downside. And now, basically, I wouldn't want it going all the way down below the initial value, so I do need to see it stay. Did I just say initial value? Yeah, initial balance. So I want it to stay inside the initial balance, and that means we really need to get over this 970 area. If we can't get over it, then that mean reversion is still on the cards. It's still in danger of just running lower and this turning into an entirely different setup. But I am aiming for a failed auction long up to my level of interest of 975, and at that point we would have a neutral day type. And then I would just wait to see what actually happens later on for COMEX. What is the 100 tick chart? The 100 tick chart means that you have a new bar after every 100 ticks. So it's not time related. It doesn't have time inside it. Instead, it counts ticks. So however much time, it takes to print 100 ticks, that's going to be your bar. Whether that's 2 hours or 5 minutes or 3 seconds, it doesn't matter, okay? And it sometimes helps just with the movement and timing if you want to do something around the level. Instead of doing the time-based charts, like 2 minutes, 5 minutes, 15, 30, for me, this is pretty helpful as a sort of a slight replacement for Bookmap, which I do have on my other screen, so I'm just going to show it partially here. So I do have that as well. I always monitor that when I'm trading, and this is why I also decided to scale in, because I saw a bunch of orders that were there, kind of got filled, and then they just turned it around. So we seem to be getting the move that I was looking for. One slight caveat here, we do have a VWAP, overnight VWAP at 973.4. So that could put a little bit of a wrench in the works. And if that happens, this is going to be more of a scratch trade if we start to react. However, this 975 is pretty nearby, and we should overshoot the VWAP a little bit in order to get this level, which is taken from an options chain and was reactive all day long yesterday, right? If we go back to yesterday, this is sort of that post NY cut into Euro close time. You guys know I had a long in one of my XFAs yesterday, and that idea did work. But I kind of got chopped up in my live trying to do stuff, and then, just didn't manage to actually get my A game back. I was probably getting a little bit sick, so I'm going to pitch it to just not making good decisions because I felt a little bit off. Plus, all the extra sneezing I was doing did not really help my case. So moral of the story, don't trade if you feel a bit under the weather. I felt a little shivery and stuff. And I was like, what is going on? And that's what happens when you go to a test center. A whole bunch of people are touching things. And it's that time of the year, isn't it, when a whole bunch of viruses are floating around. And I don't really leave the house that often unless it's to walk my dogs. So it's like nice and fresh air and all that. But if we go back to that, like I said, post NY cut into euro close, you will see that they sort of touched and overshot the level slightly, but then it just immediately went into a nice little move of about 50 ticks. And then, so it then kind of stayed range bound, and that was pretty much the end of it, right? So now I'm expecting something similar to happen today. And it is one of my hypos that 975 level is going to remain pivotal. Now, whether it's shorts from there or we overshoot it, then come back to it, that can happen as well. All of these levels are just lines in the sand. It doesn't have to be, D said go short at 975. No, we can overshoot it during London. And then at some point of the day, we come back to it because it still remains a level of interest. We still haven't had the options expiries, which is where those levels are taken from. And until such time, there will be a lot of people waiting with that strike price, right? And that's why they stay reactive usually in some shape or form throughout the week, even though they might flip around, but they will still remain in play, so to speak. When you're near those levels, you should pay attention to them. And that goes for anything, really. It goes for my ADR, ASR, value edges, and all that good stuff. Coog 422 says, damp British weather, stay warm. Yeah, this is why I have my little cardigan and stuff, just trying to keep warm. I am doing a dog walk later on, so I'm going to make sure that everybody's in warm clothes, because some of my dogs don't have a ton of hair, so some of them need clothes. Not all of them, like Astrid Mimi is like, she's the one that was trying out the dog perfume. I don't know how much you watch TopstepTV, but yeah, she's extraordinarily hairy, and she only needs a coat when it gets like really, really cold, like we're talking like 0 degrees and stuff in Celsius. British tea, yes, I've got peppermint tea, ginger, lemon, and all that in here, so no coffee. Manfred says, good morning, Poppy Mom. Thank you, Manfred. Good to see you. Good morning to your beagle as well, and yourself. Liam J says, hi, as we're both UK citizens, how do you get paid? Via Wise or Anther? So Wise is what I use, but I have two accounts. I have a personal account and a business account, and I do get paid into my business account. Okay, it's a little bit tricky because technically Topstep don't give out the W8BENE form, which I've done business through with all other prop firms, but for some reason they don't want to give it out. So I get paid via Wise, and I've never had an issue. But I don't know whether it's maybe because of I don't know, maybe it's because it's your personal account. Like, why would they close your account? I don't quite understand. But if it's a personal account, maybe they have a problem with that. Because technically it's a little bit dodgy since they assume that you probably won't report that. I don't know. I mean, Wise shouldn't have that much of a power over your account. So I would really dispute that. I would get in touch with Wise and kick off an argument if it was me. All right. Joe Mama says, do you make money from Topstep for a living by trading like this? It's one of my incomes, but I am a businesswoman. I do have 3 different companies, and I have a pretty sizable personal account. So no, this is not my main source of income, but you know, every so often I will drag like 4 or 5 grand from it. You guys know that I'm pretty risk averse at this point, and I don't like going huge size on these accounts, because I think they are pretty tight in risk. And at this point in my life, all of these accounts are just supplementary income for me. I've been doing this for 17 years, right? So I'm not new. And at this point, I mostly have everything that I wanted to have in life, including the 8 dogs that I have. So, Brishti, I have 8, not 5. I know, crazy dog woman, right? You have crazy cat ladies, and then you have crazy dog ladies, and that's me, the CDL, crazy dog lady. But I do have a husband, so we both take care of them, and technically that's like 4 each, right? So it's not, it's not. It is a lot of work, but they're very cute. It's been my dream. I've always wanted to be covered in puppies, and managed to have that dream come true. So yeah, in regards to income, I have 3 different companies. A couple of them have nothing to do with trading. We do have some property investments as well. So what else? I have an IT recruitment company. And obviously I trade for a living as well. I've got to say my major source of income on the trading side is DAX, where I will typically make anywhere from 1.6 up to 4.5K per day. So that's quite nice, but we don't have DAX here. So I'm looking forward to the day when that comes, because that is my major product for London. A lot of the stuff that I do in the post and white cut time of day is obviously not online because I'm not on air at that time. So I do trade. Setups come when they come. Markets don't really care whether you're on TV or not. And sometimes I get a good setup. However, I do use these XFAs to try and show you and illustrate the trades and trade management. And I think it's actually more important how to manage the downside of something like this, because, many people are like, oh, I'll just whack in my max position size and that'll be it. Because of the tight risk parameters, you can't really trade like that unless you have a lot of cash. Typically, before I do any sort of payouts, depending on the account that I chose for an XFA, I want to have at least 5 times the amount of drawdown of the original max drawdown in there before I take any sort of payouts. And I'm actually not that happy taking 50% out, even though I have done it. I generally take between 20 and 30% unless I've had an outlier day where I kind of made, $7,000 or something. But again, on these accounts, that is a lot less likely, because I don't really do trending type moves that I hold for 8 hours. Most of my trades last between 45 minutes up to a couple of hours. And that means even if I'm in like 3 contracts, we're kind of looking between 2 and 4K on like a really, really good day. So if that was the case, yeah, I may drag that down. However, most of the time I will use XFAs just to illustrate things or to be a little bit more aggressive, but just a little bit, not too much. Otherwise, you blow up. I don't like the fact that this is now below the initial balance. So let's close that out and eat up the bit of the loss. But that's only 176, right? It does seem like the HVL has flipped gamma. It's flipped gamma exposure. So we may get my second hypo, which again, I might wait for a little bit longer, and I certainly would like to see 970 retested before we do that. 170 down, it's easy to get out of. 500 grand, 2 grand, not so easy. So yeah. Do you give weight to 200 MA in the 30-minute chart? No, I give weight to 200 DMA. So and especially in equities, right? So instead of looking at very low time frames, I think too many intraday traders forego the large time frames, and they get this they get blinkers on, right? They have blinkers on. They're only staring at very low time frames, and they're like, no idea what's going on a larger time frame. I'm not one of those. I actually look at the monthly chart on continuous charts as well, which we don't have here. But I have a dedicated charting platform with my own indicators because I have a software development company as well. Why? Because I needed the indicators. We didn't have them. And in 2015, I joined forces with a software architect who worked for bulge bracket banks such as Credit Suisse and Barclays Capital. He was looking to get out of that world. We were friends, and I mean, we were friends, but I still commissioned him to make me my indicators, which turned into Blatek indicators, and that is one of my companies. So we have some income from that as well, and as a part of that company, we also create mechanical trading systems. So some of the setups that you see can be mechanized. Not all of them, because some of them are discretionary, because I'm still a human, right? I'm not a robot. And I do try to be as systematic as possible, but at the end of the day, I'm the one clicking buttons, so I can't really claim full mechanical system, right? Because there will be emotions, there will be me trying to trade away from the level and all of that, so that introduces variability. But when it comes to the algorithms, we usually take one trading idea that we've statistically observed to be highly probable, and then we just do stuff around that particular trading idea. So one of the other reasons why I wanted to go long here is if you look on the daily charts, let me maybe increase that because we're not old. So we had a bounce from a demand. And yes, yesterday was a pretty big day. But whenever you have that, there is some sign of a mean reversion happening. We seem to be struggling today. So it's kind of neither here nor there. We sort of failed the auction, then we didn't fail the auction. We have a lot of wicks. And frankly, not a lot of commitment either side ever since we stepped into London. Asia seemed to have more conviction on the level. So when you look at that and you see that there was a reversal from a demand on a very large time frame, what would make more sense is to look for longs if price permits and if levels permit. So for me, that would mean either doing a failed auction here and then running it up to the next level of interest, which is 975, or to wait until we get down into the area sub 963 and then fish for the longs from 957 all the way to 960. Remember, every time I call out a level, it is a zone. It is not like, oh, definitely we are, longing from a singular price point. I work based on the premise of wait and see. So I have a level, it reaches it, I want to see how the price reacts there, and I will use a combination of bookmap, tick charts, and how the price looks TPO wise. Are we extending? Are we in a trending day? What time of day it is, and what sort of expectation we have for that time of day. And that's all taken from observations over many, many years. So it's not something that you come by immediately, but you can sort of skip over stuff if you go to a very, very good course. And then somebody tells you, well, this is something that I've used. And then they spew out some stats. Like if they can't give you data over the probabilities of the setup, just run away, Like, what are we doing? Oh, we go long from VWAP. Oh, great. Yeah. Slow, sarcastic clap, What about, what about day type? What about, range bounds versus breakouts versus reversal strategies? No. We go long from VWAP. That's their main strategy. And it might work. Don't get me wrong, it will work. But those are typically the type of people who complain how shit the price action is on a range-bound day. So it's like, no, it's not shit. You just need to get a bit better at trading range-bound days. And maybe stick away from VWAP on that day. It's just my 2 cents. Okay, let's see what else we have. Professor Trader says, hi, Deeyana, may I know the indicators that you use for Confluence? I don't use any indicators for Confluence. I use the indicators that I have, which automate the things that I'm doing anyway. So let me make this perfectly clear. My indicators do not tell me, hey, this is a buy or this is a sell. It is a lens. I will show you what I use, but it is a lens into the market state. So these are my blind tick indicators, and I'm not going to stick around. We want to stay on Topstep, but this is what I use. So I have all of my levels already plotted here. So this is why whenever I come to Topstep, I do drag out the levels from here, and then I look at the options chain, put those on the chart as well. But basically, it immediately gives me the initial balance. I don't have to draw it. I immediately see the extensions. And then this thing on the side, this is my 4-week volume profile. So I can see where the little holes are. Now, you can get something similar on the visible range. So we do have volume profile, but we're still working on the TPOs, which we don't have. I also use Blotic DR, which you can't see here, but I am going to move it. So if you can see over here, this is the information about individual sessions. So we have Tokyo, London, New York, and then current session range, how much we've traversed, what is the ADR overall, how much we traversed right now, so 203 versus 108. So we're still working inside the day's range. There's no outliers for now. And then this panel shows me whether we opened above value, whether we opened far above value or inside value, whether we extended the range, whether there's a rotation through value, if it happens between so the first couple of hours. But that's the charting package that I have. But full disclosure, that is my company. So yes, if you want to support me, go and do that. But at the moment we're working on Ninja indicators, but right now we only have MetaTrader 5 for AMP futures. So that is where my charting package is. But my team is currently working on translating at least our flagship indicators into Ninja. So yeah. All right, we've tested 170. So now I am going to try that mean reversion trade. I do wish that they would do the ATM strategies kind of like Ninja has. That would make things easier, because sometimes when you're changing position size because you don't want to plow in with a full position size, it gives you double the amount of stops. So then you have to mess around with that. So that's a little bit annoying. So for the developers, I do hope that at some point they will adjust that. And then you can just click once and, know that you're going to be in with your actual tick size. Because I don't use dollar values for that. I just use scalable tick size. So 35 ticks I will be using as the first disaster stop, regardless of whether I'm trading my big account or tiny accounts, or whether I'm trading 1 micro or 10 minis or 50 minis or whatever I'm trading, right? So that is something I'll be looking forward to as an update at some point. I know that many people have requested, so we don't need to talk about that. But yeah, only one lot here. I'm not going to be scaling into this because we're still very undecided and we're still technically failing the auction. But I don't like the fact that we've gone through this HVL level, which flips gamma, and we are opening up the potential for a slower fall back to yesterday's value area, which is sitting around 96336. So that's why, and it's against what I've seen on the day as the reversal. So this is a more risky trade and thereby smaller size. All right. Lazy Lion says, good morning, Dee. Is the 15-minute bull flag breakout on GC just before Frankfurt Open an example of your Frankie fakeout? Yes, that is correct. Basically, you have a smash through the Asia high, and it looks like it's breaking out. But then it sort of runs out of steam, and it goes, wow, wow, wow. It's not a breakout. It's a fakeout. So that's why we call it the Frankie fake out, because it usually happens between the finish of Tokyo and start of London, when it's the Frankfurt Exchange Open, the Eurex, and they frequently like to fake things out. It's not that they like to, it's just that they are generally a smaller volume exchange. So for that first hour, there's a kick up in volume, but largely it's not like the true thing. And, you know, I talk about this in my program, in level 2, whoever is on there, in quite a lot of detail, what to look out for, what type of a setup, and all of that. But generally it will be some sort of a, you know, depending on how far you actually get away from Asia high, and whether you have any options related levels. If there are no options related levels, I'm a little bit less confident that it is a fake out. So again, it's all very contextual, and you need to make sure that you are reading the market not through your own bias, but trying to stay as objective as possible, which is not always so easy. In fact, I would argue that that's probably the toughest thing about trading, right? Keeping objective and not trying to paint your emotional decisions based on the P&L, previous trade, this and that. Just to be completely objective, trade with enough size that you care a little bit, but not enough size that it can completely derail your account, okay? Dee, can you analyze gold again around 26.25? I don't have anything around 26.25. I have something around 26.20. So, yeah. For now, it's just a long. There's nothing there. 26.37 could be of interest, and 26.44. But I have nothing. I have nothing. Nothing around here, right? Let's call the old Whitney into the whole trading world. So yeah, literally no levels around here. But yeah, 26.20 remains like a pivotal thing where I would want to look for some trades today. Outside of that, I don't think we should stand in front of this. So yeah, I would wait to get a full understanding on what they're trying to do here, because in my eyes, this is just not, like, I don't see anything particularly logical in gold apart from up and up. And I don't like those markets. I like my two-sided price action because you can find more opportunities. And right now, what do we have? Like, this is from yesterday. Actually, this is from several days ago. Up, small reversal, up, more of a speed bump, overnight activity, up, small reversal, up. Like, do we need to analyze it? It's just up, right? So I wouldn't. Yeah, maybe look for a pullback. You know, ideally, like I said, I would like to see 26.20 today, then go long. I'm not chasing this. This is ridiculous. Yeah, on the larger time frame, it does seem to have turned around, but at the same time, there is a former zone here. However, we could come up all the way to this area, which is the first area of supply. I'm not that happy with it because it's in the middle of nowhere. So really, I would prefer. So basically, I want to be long up until these areas. Now, once we're there, you know, I might decide to run some sort of intraday shorts. But then we have an area up here that is comprised of the volume POC as well for that visible range. So that could be a better area of interest for any shorts. But until then, longs and pullback for me on gold. I mean, we've turned around and we're just going higher, right? That's my 2 cents. But yeah, for now, it's not an interesting market to me because it's just going one way. So, you know, I want to trade things that are quite obvious. I don't want to like struggle with what the level should be doing. So if I don't have a level, I will typically stay away from it until we reach the level. So I will intentionally miss out on quite a bit of the move in order to obtain that quality trade location. So I'm not going to chase it. That doesn't work well for me, right? I'm a core sort of mean reversion slash standard reversal trader more than a breakout trader, which you can see here as well. I'm actually going to kill this because this platinum is annoying me endlessly. And I'm not going to trade now until much later in the day because it's not doing anything, right? I tried a long, it didn't go really in profit at all. Tried a short, it didn't go into profit. Now that's either a sign of a range-bound day or a very, very slow day. So when I try a couple and both go against me in their different directions, that means pause off the mouse and wait for a better time of day. Okay? I'm not going to keep getting chopped up at like 150 and 80 bucks at a time trying to figure out what's going on. That's not the name of the game here, and that's actually one of the fastest ways that you can dig a hole for yourself, right? Going long, then going short, then going long, then going short. Try twice. If neither is making a move, it's either not the right area or it's not the right time of day. Like it's, you know, it's done. What's the best way to learn bookmap? Just start watching it. Record your screen alongside the chart of some sort and watch it, record it, rewatch it, rerun it. That's the only way to do it. The bookmap is a very discretionary thing, right? So it's kind of like reading price action on the fly, but through big bubbles. And the only way to learn it is just a hell of a lot of screen time and journaling, you know, writing down, like, let's say, for now, what do we have? We have a rather uncommittal 2 dojis and a jump up. Well, what did that look like on bookmap? So if we go back, maybe I'll scale out a little bit. So what did we have at the time? Well, we had nothing. We had a whole bunch of orders pinging around, back and forth. And then this thing happened, right? That's one of the reasons why I exited, because I saw it in the corner of my eye, massive lot of orders, and they just kind of went the other way. So it's still kind of a failed auction. I just don't like the way it's doing it. And now we're coming into supplies as well that were created on the way down at like 72. And I'm just like, yeah. Like it's starting to feel laborious. You know, the trades that if it's a good trade and if it's a good level, should not feel laborious and like labor intensive in general. Jesus. But yeah, so just record your screen and see whether you can start finding some sort of sense in it. D, can we look at CL or HG? We can look at both of those. So let's start with CL. On a Mahusive time frame, we're in a range. So bottom of the range, little bounce, middle of nowhere right now on the weekly chart. Daily chart, we have a little tiny bullish engulfing, but it's too high up in this structure to make sense. I don't like when I see this. This is usually a hallmark of another range inside a range. So we have a big range on a weekly chart, but then we also have this range here. I was sort of long biased last week. I'm not sure what to make of crude oil right now because it seems to be in a holding pattern, and then we've had 1, 2, 3, 4, 5 days. You know, this is kind of the 6th day that we're not doing anything. So until this range is broken, I would just play the range, right? So shorts around 69.50 and then longs from around 67 all the way down to 66.50. So that would be my thing. And I would aim to probably avoid trading in the middle of this range, even though it is a daily chart. So unless you have something like a touch of a value high from the outside, you know, some sort of a reason, very, very good reason why you would get involved in the middle. But yeah, maybe if I can get a short around 70, that could be nice, because they could maybe run some stops from 69.50 up to 70, and then maybe a short back into the range. But until I have another day where we actually have a trend, I would just stick in a range, right? Let's have a look at copper. What am I doing? Oh. I keep doing this. Christ, no. There we go. All right. Same thing. Weekly chart. Weekly chart. Now, this one had a perception of a range, but right now on the weekly chart, we are not able to go higher from it. So as the week has started this week, we have shorts stepping in. So yes, I would potentially be looking for longs around here, but just by the fact that the composition of the weekly candle is not yet showing up any buying, and it's actually showing up an attempt at a buy and then a failure, I would actually say that this doesn't look that dissimilar to crude oil, with the only distinction that the demand area and the conterminus line, as I like to call it, which is the market shift between the equilibrium and the flip of the direction, is actually lower down. So 407.85 would be something of interest for me, and then I would aim to look for intraday levels that speak to the longs. So until that's broken, I would still err on the side of longs on copper. But for now, it's kind of undecided, which is why I'm not on copper today. We are reaching the value high very soon, but there are no good options levels around here. So I'm not that happy getting involved until I get like a 30-minute reversal. If I don't have a good options level, I don't front run trades. I will typically try to, I mean, I never say never, right? But generally I try not to until I see a committed reversal, especially once we've gone into a single-sided reversal, because this is now effectively an auction down, successful auction down with, do we have some single prints? Yeah, with one set of single prints in between, so they're here. So yeah. Average session London low is just below value high. So yeah, let's see. Maybe there's a copper long that is kind of acceptable, but it will be just an intraday scalp up to the initial balance low, which is at 411.05. So yeah, leaning longs on copper, leaning longs. These levels are from the other day, so they're not relevant. I have something around 405. Or actually, it's the same thing. Did I do this today? No, because this is wrong. Yeah, so maybe a long on copper. We'll see. But not now. So I'm going to wait until another 45 minutes before I look for anything on copper. Yeah, let's see. Trader DZ1. What times do you use for average session range for crude and gold? Bit confusing COMEX, NYMEX. Yeah, so this is not COMEX or NYMEX. Obviously, once those kick in, gold trades on COMEX. So you will be using, I don't know where you're based in the world. But if you're over anywhere on my side of the world, COMEX starts at 8:30. Well, 8:20, really. Sorry, that's I've just totally used the Eastern time zone. Oh my God, that's crazy. All right, I'm gonna use UK time zones, because I'm constantly battling between 3 different time zones. Sometimes when you are working with our American friends, they work in either Eastern or Central or Pacific time zone. And then I have people in Europe who have Europe Central time. I'm on GMT time. So it all just gets a little bit jumbled in my head, especially at this time in the morning. So I'm going to use UK times, GMT times for COMEX and NYMEX. That's 1:30 p.m. for gold and 2 p.m. start time for NYMEX for crude. Now, most of the metals also start with COMEX, but for London, there's only one session. So I use 8 a.m. and then cut it off at COMEX time for precious metals. So that's the shortened session, right? I don't use the entirety of it, because why would I? It pollutes the data with a whole bunch of volume that we get, especially in gold, for COMEX. So it just doesn't, it doesn't give you the same information. I only want to see what London did before the big boys stepped in. And those levels work a lot better than mixing and matching apples and oranges and lumping them all together and then calling that the value area. Well, clearly, average session range, if you're calculating it like that, is going to be heavily weighted towards the moves that you get during the initial balance for COMEX, which is really quite something, right? So why would you, to me, it never really made any sense just from a data point of view. So yeah, that's worked for me. Hey Dee, do you trade FTX on the mini or micro contract? It depends on the account. When I was doing prop trading, I was prop trading for DAX. Before that company went a little bit, shall we say, complex with their payout rules. They're still fine, and they're probably still the only choice for Eurex. I think there's another company that offers it, but they're a lot more expensive. However, with any sort of DAX trading, it depends on how much profit buffer you have in the account, the size of the initial drawdown, obviously. So personally, right now, I only trade DAX, full DAX, so not the mini. I actually trade the full DAX contract, which is 25 euros per tick. So it's quite expensive. The mini on DAX is actually cheap because it's 5 euros per tick, and you can easily use the same sort of 35 tick stop loss, just like I do on platinum. So I'm looking forward to it. Again, let's upvote that Eurex post again. You've just reminded me. Dee pushing Eurex always and forever. There we go, Eurex there. You don't have to be logged into Topstep, but you do have to log into either Facebook or Google. And just, just do, click on that link and then go into, do we have some weird crypto people in here? What is this? Person with a Malaysian name or Thai? Spewing weird names of, yeah. So can we kick that person, Bruno? This is a little bit spammy. Yeah. Yarden says I'm long 3 MGC from 2635. Yeah, great. You have the single prints protecting you. So, yeah, I don't know what's happening here. Yeah, but that's a little bit spammy. So I'm sorry, dude, but next time, if you want to stay a part of the stream, don't spam, okay? Don't spam. It's not nice because then it's just as if coming in here and then just putting GC, PL, HG into the chat. It doesn't make any sense. There's no context. And you will be looked at as a spammer. So, just don't do that. Dan Trader says, Dee, I might have missed it, but can you explain how you use gamma levels data in reference to trading levels? Well, interesting you say that. I've been talking to Mentor Q guys So I talked to Fabio, and we're actually going to do a little webinar on their channel on 29th of November. So I'm sure they will be announcing that. And actually, Anne-Marie and myself are going to be on there. So if you want to find out exactly, how us to sort of use that, maybe that's the place to be. So, they're a very good company. I love that they cover alternative markets, not just SPX and, ES. They offer options data for a whole bunch of markets, which is why I'm absolutely loving what they're doing. Because I had to do all of that myself. Like I had to go into an actual options chain, just look at the options list, and then just see where the interest is, and then try and sift everything through myself. And I have traded options, but I wouldn't call myself a super options expert. I'm okay at them, but and obviously with the Series 3, you kind of do get an idea of why some of the moves are happening and how hedgers are using them for their purposes, which is what ultimately will drive a lot of the options activity, especially in some of these products like platinum, copper. They're all instruments that are not necessarily speculative. They're there kind of for people to maybe, adjust inventory or cover the cash forward sale or whatever. But effectively, it's down to contextual nature of what's happening. Like there is an expectation. Like let's go back to platinum, for example, because I haven't done the levels today for this. And platinum still hasn't really moved that much. It's like it's still stuck. Like, come on, man, get to 975. Let's see what happens. So basically, I have the HVL, and I have the most amount of calls located at 975. So yesterday, on the first run up to it, we first and foremost had an extended move up to there. I also had like some levels of average session range around there. So it wasn't just like, oh, it's just a call resistance. I mean, it can be just a singular level. You can kind of keep it simple, but the way I like to do is to get it contextually correct for the day type that we're in. So if, for example, I was in a failed auction from 975, and that wouldn't be the case today because we will be in a neutral day type, that would markedly change the target away from the level. But if I've managed to find a level away from the options, and there are some of my levels that I use from profile, time of day, and my average session and average daily ranges, I'll be looking at it as a target, right? So it's really, really contextual. It's more like a sort of a line in the sand that you can use however suits you. Either trade up to it or trade from it. But I will tell you that if you trade away from it, you need to have a very good bloody reason why you'll be getting involved away from the level. So something like, I see a reversal is not good enough because that doesn't carry the same amount of probabilities in it as, let's say, a short from 975 on a first test after an extended move up. Okay, so that's like a completely different probabilities. So for me, the highest probability trade here right now, given that we're already in a neutral day type, it wouldn't be a big trending day at this point because we already smashed through the low of the initial balance and now we're creeping up to this. So one thing that I might see here is that we're going to stay range bound in between these. I don't think we have any releases that would affect platinum today. So because of that, it's like I don't see it moving anywhere because you need a cash list. So, and we don't have that. So yeah, probably a bit of chop between 970 and 975. And therefore my target for this would be a session VWAP. So short from 975 if I can get it, or better, right? So I'm going to wait until it turns around, then maybe snipe it from a 100-tick chart or bookmap or something. And then aim to visit either today's POC from TPO profile or session VWAP as my target. So it's going to be more scalpy day, kind of base hit day. Scalp it here, scalp it there, scalp it here. And on these sorts of days when I expect chop, and why do I expect chop? Because these two levels are pretty important and they're sort of stuck, right? We haven't been able to get any traction outside of them. That spells chop to me. So there's another way to look at things. If you have two very important levels close together, it could be that the price is going to stay range bound between them. that's something that I can see in the TPO profile as well. So a completely different way of looking at things, completely different set of data. Both of them are telling me the same thing. We're stuck. So, you know, that gives me an outlook. So that's why I tried a couple of sort of momentum type trades, got chopped up. So I'm like, okay, that means I need a better trade location. That's why I stopped. That's why I'm talking to all of you guys to kind of kill some time and to provide more information and more education while we wait for this setup. But basically now it's down for us to effectively snipe trades from ballpark this area and ballpark this area, right? So anywhere here. So this is like my rough area. Areas where I want to be short and long in light of a neutral day type. So I don't want to chase it in the middle. That's a terrible idea on a day like this. And until this breaks with quite some confidence, I'm just going to look for pinging back and forth, maybe grabbing 20 to 30 ticks either side and walking away, okay? So multiple ways how you can use options related activity. You can use it for reversal trades, you can use it for springboards, and you can use it to determine whether there's a chop if we're stuck in between two major levels. Yeah, so Michelle Brown says, I have mine loaded on TradingView. Yeah, I have the same thing actually. So to avoid cluttering up my major level, a major charting package, I do have this. So I do have them on TradingView. I actually tried to install them, and I need to talk to them about that. I tried to install them on MetaTrader, but it crashed the platform. So I need to, we need to have a chat about that. But yeah, TradingView works pretty well. You can even drag it out of the string on the query bot and just plop it yourself if you've got nothing better to do. But I like automating these sort of things. And like I said, all of the indicators that I use, they're not indicators that are going to tell me when to buy or sell. They're more of a lens into the market state. Do you need the premium to get the levels? No, you can get basic, but I'm not sure you get the indicators with basic. So it depends on the level of work you wanna do. Basic, you get just a string, right? So they have a Discord and there's a query bot with a whole bunch of little codes that you can use, and then you can even go to like their designated sections, and you can see where the levels are. That's what gets plotted onto the charts. But yeah, you can start with just 7-day, free, and then see how it works. Yeah, Michelle says I love Mentor Q. Yeah, I obviously chose premium. I always go for the premium, Yeah. All right, let's see. Luigi1RR says, yesterday support on Topstep told us they would erase the losses from yesterday. They will only erase the losses that happened for the duration of like the half an hour that they were happening. Okay, so if you had a whole bunch of losses outside of the time when Topstep was doing quite well, that's obviously not going to get erased because that was you. Like, you can't rely on them to just, do stuff if you traded and then you traded badly and they're like, oh, but they said they were going to erase that. Yeah, it was only for 30 minutes, right? 30 minutes. That's the only time that the Topstep was malfunctioning. And I think they did roll one of, not this one, but I have more XFAs than Ninja. So one of them got rolled back. So yeah, so it did work. But they only rolled the losses for that time period. They're not going to roll it for everything, right? Well, they're not awake yet. So maybe, again, give them time. If that's what they said, they're going to give back all of the losses. Yeah. Let's see. If you were actively trading... I can't read that, Bruno. There's too I don't have my glasses. Hold on. Let me move it to the bigger screen because I have it on Elgato and I can't see squat because I'm not old. Apologies for the confusion. So Trenton, this is Trenton from Topstep. Our earlier update was incorrect. Today, Topstep had a technical issue that resulted in some traders experiencing unresponsiveness. To make it right, if you were actively trading between 8:30 a.m. to 3:10 p.m. and ended the November 18th with a negative P&L, we removed all of the trades during the specified period. If you were actively trading between 8:30 a.m. and 3:10 and took a trade during that time that resulted in you hitting your maximum loss limit, your account has been restored. So yeah, it should have been rolled back from the looks of it. If it hasn't reached out to support, 100%, because that's not, if you were trading and they promised they would roll it back, they will make it. They will make it right. But if it hasn't happened for your account, then get in touch with them and complain, obviously. Francis is here, 10 Trading. Morning, Dee and community. Morning, Francis. Very good to see you here. Maybe drag you on here again sometime. That would be nice. Paul H says, I wonder if we can automate the collection from QueryBot to TradingView. I mean, you probably could. You probably have to use some external like DLLs or something, but yeah, you might be able to automate it. But you know, it's just like drag thingy and done. So yeah. No, please correct me. No, please correct me if I'm wrong. I will absolutely own up to that. Like, obviously, I mean, you know, as a trader, you will be wrong a lot. So, you know, I am perfectly fine being wrong on things. I have zero ego. And yes, I was wrong on that. So I do apologize. I didn't. So I saw the first update and then I didn't see the second one. So, yeah. So I do apologize about that. You were right. They should have rolled your account. If they didn't, go straight to support and complain. I hear they've massively improved their support. So yes. All right. So I don't think I'm going to be doing any more trading until we get to some more relevant areas, because I don't feel like getting chopped up even more. And I'm going to wait until some better time of day that statistically works really nicely for me to a high degree of accuracy rather than keep doing trades. I might even go and see whether there's anything in DAX. I haven't really spent a lot of time this morning. I already had a decent day yesterday in DAX. It was just a short, and that was it. But yeah, so I may have, let's have a look at DAX actually for a second. Yeah, I have a good level in DAX for a long now around here. If we can get some buyers interested here. They already appeared, but for now it seems to be stuck in range. So I'm gonna keep an eye on 19,010 in DAX, stalking along there. Anyway, guys, let's do another question and then we're going to finish it up. Do you trade towards or away from the highest volume levels? Or does that change with the price is sideways or trending? I would say that would depend on what type of a day we have. Are we range bound? Are we sustained auction? Are we auction fade? Are we failed auction? So it really depends, right? If I see that we're in a thin volume area quite far away from the volume, highest volume sort of HVNs, I will trade towards them if everything else permits. So if I see that we've opened slightly above value, we are maybe reversing around value high from the outside and then going towards, you know, pushing with quite some momentum, I will obviously trade towards it. But, you know, I'm somebody who's a very flexible trader. I don't think many people can do that, okay? At least not unless you've been trading for like 10, 15 years, right? you eventually get better at different market states. You start off being a single-sided trader. I started off being just a reversal trader. But then through the years, after about 5-6 years, I was pretty good at that. And then I started to find out that I suck at trading range intraday. So I spent a long time, probably about 3-4 years, trying to bump up my skill levels as a range trader. And then I was pretty sucky trading continuation moves as well, right? So you would already have a reversal, and then you're supposed to jump in. Well, I'm still not that great at it, but in the right set of conditions, I actually can be pretty good, right? So for example, yesterday crude oil went into a trending day, and then eventually we got down to the initial balance high, which acted as a bounce point. So I did do that trade, and it did pretty well because I had a couple of things going there. It was too late for a failed auction, and it was touching the initial balance high and reacting almost immediately. So towards the end, into settlement, I decided that that was the trade to take, that we're not going to have a further drop into the initial balance because of the time of day. Because the failed auctions towards the last part of NYMEX on crude oil are just not really a thing. Like, they happen so rare that it's like out of the entire year, you might see them happening like maybe 5 days. And even that, like there was one year, I think I did a sample size of 1 to 3 years, and it only came up in like 3 days. So I'm like, yeah, doing failed auctions that late, probably not the best choice. So now I use that as a sort of a situational awareness to run the other side of things if there's a level. And for me, initial balance hedge is definitely a level. So if we can get down there, I can run a slow, sustained auction trade to join that move and then just run it into settlement rather than fighting. So I've gotten better even at that. But yeah, if I'm going to say, depending on the experience that you've got, specialize in one thing first, and then over time, start to work on some of the others. Don't try and work on everything at once. Be a reversal trader, mean reversion, catching failed auctions, catching momentum trades, catching this. Specialize in one thing first, get very good at it, and then add on to it. And eventually, I think we all become more versatile in reading the day type and being able to take advantage of it on most days. But again, we're still human. We will still get it wrong. Sometimes a day starts off like this one, where you've got a good level. So it's like H3L, we flipped gamma. Wow, let's go down. So that, you try that, and then it doesn't go anywhere. And then you go, okay, that didn't work. I'll try a failed auction. And then it goes down. And you're like, and then it reverses. And you're like, oh, damn it. So, it's not that you're reading the day wrong. Your execution is not doing what you're supposed to be doing. So you're basically not waiting for good trading locations for that day type. So that's what I'm doing now. I'm just sitting here stalking like Bob over there, my little lizard that is stalking everybody, the green thing. So we wait, right? We wait until we get to either second standard deviation, so this is where volatility bands can actually serve you really well, or most ideally, close to this session low, and then smash through. This is where I would use Bookmap to see where those levels are located. For now, I can see them around 68, right? So they are not... There's one set of intraday sort of smaller size stops right below this, probably momentum traders trying to catch that. But I think that's not a very good trade location. However, 68.9 and slightly below is where the next set of people are waiting. So I would like to see that smashed. So not necessarily a complete low, just based on Bookmap. This area, which lines up exactly, strangely, with my conterminous line where you would look for a test of the nearby demand on a slightly larger time frame. And remember, the smaller the time frame, the less accurate the supply and demand areas are. So you really need to match them up with a whole bunch of stuff. But this is a 30-minute chart. It's just about okay, even though it's not super accurate. And then failing that, if this moves away from me, I have that 975, again, even printing on Bookmap, as the next level of interest. And it's actually 97.4, which is incidentally where I've placed my other rectangle that I've just deleted for some reason. So yeah, but the volatility bands can help you here as well, okay? All right, guys, we're going to end it here now. Make sure to like and subscribe if you are new here. And if you're not new here, well, give me some love, man. You know, caress that like button. If you're finding any of this stuff useful that I'm yapping on about. We still don't have a profitable trade for today, but hey-ho, at least we managed the downside pretty well. And I didn't continue, so that's always a good thing. Now I need to chill out. Go walk the dogs for 2 or 3 hours and then come back with fresh eyes. Hopefully this is going to be all shaken out by then. And then we can see whether we can turn this around for the day. And maybe plop in a live account trade at some point today too. We have grown our Discord, I'm going to say this, so we have grown our Discord to, imagine, 96,000 people. This is complete insanity. So if you want to check out what's going on in Discord, if you want to hang out with our lovely coaches, they all do like free stuff in there. You have Coach Jay, Coach Ray, Coach Jack, Coach Paul. Everybody's doing their own little sections with a lot of detail. Plenty of them have multiple decades of experience, or at least sort of 10, 15. So you know you're getting the information from a lot of years of staring into the markets and, you know, just trying to make sense of it all. And, you know, the skills that we all have, they're very difficult to come by. So we should all be very, very grateful that they're doing this for us. If you like what we're doing here, please drop us a review on Trustpilot. I've just posted that in the chat as well. We really appreciate reviews. Obviously, any business in this day and age relies on the experiences of other people, because it's all very well that we say, you know, we're amazing, but you just want to hear it from others, right? So that's where you go. And if you have a positive experience, even if you have a negative experience, tell others, right? So that's what the Trustpilot is there. Thank you so much for hanging with me. I'm going to sign off. I'm Deeyana Angelo, aka Market Stalker D. And this has been the London session on TopstepTV. Enjoy the rest of the broadcast later on. I will see you again tomorrow. Take care.